Okay, looks like we now have Mike at this point. Okay. All right, guys. So I think you guys can hear me now. I don't know what happened there. Okay. All right. Sorry. I guess we should restart, folks. So basically, I was saying that we have a holiday on Friday, and it's Holy Week. So Friday, you have much of the Christian world closed for trading, especially Europe. Um, Elsewhere, okay, I'm a bit lost. Okay, let's start again. So I was saying that Friday is going to be a holiday for much of Europe. We have a key event this week from the US. Okay, one of the most important data from the US is retail sales. Why do we say that that's very important data? Okay, looks like we now have Mike at this point. Okay, okay, now I'm getting Alright, guys, feedback. So I think you guys can hear me now. I don't know what happened there. Okay, now I'm getting feedback. Let me just see what's wrong, folks. Okay. All right. Sorry. I guess we should get. Okay. Let me find where I'm getting that. Oh, there we go. Okay. Okay. So yeah, we can really get going now. So guys, our key data for the week will be retail sales from the U.S. We say that that's a very important data because 70% of the U.S. economy is about consumption. In fact, earlier in the day, I actually saw this blog by a Chinese person saying that China could not survive selling to selling to Europe, selling to Africa, selling to Southeast Asia, saying that China needs the US. So it's a market moving thing for us. It's a market mover. If you somehow see that retail sales is dropping, then we risk the dollar weakening. Okay, if those retail sales numbers fall short of consensus, it could be an excuse for further dollar weakening, which we have seen over the past couple of days through much of last week. So, what are we to do now? Well, guys, as you know, this is London Open, and I normally want to just trade Euro. Of course, we'll still look at other charts, but what do we have at this point? I'm looking at my platform here, and we're actually seeing, or we're actually looking at the weekly chart for Euro. And as we discussed before, we find that Euro has pushed through weekly scale resistances. We are now at levels we haven't seen since 2022. So essentially a new market structure. If I go dailies, what do we have? And it looks very similar to your weekly chart because of that big rally from the latter part of last week. Alright guys, so this is one of those times when you have to ask yourself, what do you do if you don't have reference in your charts? Because for me to find something as far as resistances go, I'd have to go back to, what's this, early 2022, late 2021 to figure out some resistances. And that's about 1.5 area, 1.15. And that's basically a psychological resistance level as well. So 1.15 psychological resistance. Are there other methods that we can use to come up with resistances besides that 1.15 area? Because working rate right now is 1.14, 17. That's pretty far from 1.15. You're still talking about another 80 pips there. Well, we might want to use Fibonacci projections later, but let me go through the charts first in other time frames. So let me add an ATR. ATR is your average true range. We want to know what the average true range is because we want to know whether we're being ambitious as far as our targets are concerned. And what are my, looks like my ATR, okay, what's my ATR value? Let me just change the sampling period for ATR. 21-day average. So we've got that ATR figure at about 127 pips. Okay, so 127 pips ATI, high for the day is 1423, low for the day is at 1310. That's another one of those things that really frustrates me when I find that the market has moved by quite a lot already. But remember, this is a 21-day ATR. If we look at our chart, much of the volatility happened in the past 2 weeks. Okay, so let me adjust my ATR. Let me see. Okay, let me add another ATR that's more short term. Let me just change the color for that. So more short-term, a shorter sampling period of ATR. Yeah, and that gives me what? That gives me around 127 pips as well. Okay, so not much of a difference there. I guess my main problem right now is how do I deal with the fact that we are near average daily ranges. Average daily range is 127 pips. We have lows for today at 1310, highs for the day at 1423, so essentially about 113 pips in price action already. Okay, so 113 pips of price action. Is there a trade for us? By the way, we have the open of London already. And what do we have in our chart? In the previous R, we tried to, we actually have a consolidation breakout. So normally, guys, you know that I like to trade a straddle at the open of London market. We have a consolidation breakout. I guess a good part of the rally from our chart is from the open of the Sydney market. Okay, so that's why we've had 113 pips already. Today's count starts from the open of Sydney and not from the open of the Tokyo markets only, not from 00 GMT. Okay, what do I have from this chart then? An ongoing breakout, not much momentum. That's really part of the concern right now, that we've had average daily ranges that a lot of people, I would say, are hesitant about trying to chase this breakout. If I go indicators, what are these charts telling me? We have entered overbought areas in stochastics, which is fine because today, we have an ongoing breakout. Your MACDs are sort of flat. So basically telling you this is potentially just consolidating. Highs from last week is at, let me see this. Highs from last week is at 1473. Okay, so we would want to try to see if we can get to that 1473 area. Do we have an excuse to just jump in right now? That's a big question for me. Let me go intraday. Why is this chart being slow at this point? So if I go intradays, overbought in your 15-minute charts. Okay, so we don't have a good price at this point for taking the buy side of this chart. I find that my really lower time frames, 5-minute, 15-minute charts, these are charts that typically scalpers would use. I find that in those charts I am overbought. So what's the plan then? Given that I'm overbought in the 5-minute, 15-minute charts, I'm skipping the idea of a straddle. I would still like to buy the euro, but not at this price levels. So what's the plan? Well, you've had this consolidation from the Asian session. We find ourselves with lows from Asian session around the 1360 area. Let me just, this is just too big. So I'd like to get to these level, folks, 1360. And if from that area, I find, again, you know me, I like seeing hammers, I like seeing dragonfly dojis, I like seeing long tails. So if from this level, from the 1360 price point, I start seeing candles like this, then, or candles like this, then at that point I would say, okay, let me go buy that euro at that point. But for the moment, I don't see this as a good price to buy into. What about selling this? I'm not really here to teach scalping, but again, let's take a look at the lower time frame. So we are overbought in our hourly chart. If I go lower time frames, do I have anything out of the 5-minute chart that says, hey, go ahead and sell me? Let's take a look. So can I scalp? Okay. So, unfortunately, okay, I actually have a shooting star in the 5-minute chart. But that wick Okay, the wick in the 5 minute chart doesn't really stick out. I mean, if that wick were here, sorry, if the wick were here, then yeah, that would be a good time, or that would be the time to to short this. But I'm not gonna jump in immediately, not when the wick is inside this consolidation. So no immediate action. What if we start seeing new highs in our chart? Remember, this is the open of the London market. You can get momentum at this time. Well, let's see, folks. We are only 8 minutes into the trade. Um, it's possible that this chart will just crawl slowly towards that 1470 price point from last week. But again, it's not a good risk reward to do anything from this price level. So let's skip our Euro chart. It's not very attractive at this point. Let's take a look at something that might be interesting. Let's look for something else. Unfortunately, I cannot really trade the dollar index because I don't have it in the platform that I trade in. How about gold? Okay. So new highs from Friday in gold. Very tight market so far. All right, let's take a look at gold. Is it something that we can do anything about? So we've been consolidating through much of the Asian session in gold. Normally, you actually have a lot of traders in Asia, especially in Hong Kong, India, during this during the Asian session. But it looks like they're not ready to take risk. It looks like they're not ready to get out of that range from Friday North American trading. So what is there, guys? Well, as you know, gold is really driven by a lot of, at this point, it's driven by a lot of risk aversion. And are there risks right now? Of course, the changes in policy that's been happening in the U.S. is a big risk for the market. But we seem to have had a reprieve. Remember that we've heard from President Donald Trump, and at this point, it looks like he's just focusing on tariffs for the U.S., or rather for China, and the rest of the world has a reprieve. He's also had a reprieve for specific industries. Okay, he's not for now. He's not going to tax the electronic sector. Okay, so the TVs, the phones that go to the U.S. from China will be under its normal tariff rates. Okay, so how does that all track? For the moment, things look stable. I guess the question is there an impetus for people to do profit taking? Remember, a lot of people made quick money from Thursday, Friday, rather Wednesday, Thursday, Friday trade. Nothing in our chart right now says that this rally is over. But obviously, when you go to the lower time frames, you see some hesitancy from the market. Okay, you've been consolidating through late North American trade in from last week. So the way I look at it is, all right, we've got this low from the close of the market last week around 3209 in gold. So what can I do? I'm not gonna play this consolidation unless I'm just scalping. However, if you give me an hourly close under that 3209 level, then I would consider the sell side. Okay? Why am I focused on the sell side instead of the buy side? Well, let's put it this way. We don't have a catalyst, at least we don't have anything new that says buy this. So my main immediate concern would be, what are the chances of people who made money booking profits, taking profits? So for now, folks, I'm really not keen about taking action, but you end up dropping below 3209, and it's an excuse to sell gold at that point. What about just playing this range? Another nice question. Can we play the consolidation? Let me go intraday. So this is hourly chart. Is there any signal at all that says we can play this? Looks very confused as far as those 15-minute charts are concerned. All right, guys, I'm not willing to take the sell side if it's just merely taking out some very intraday, some very low time frame support and resistances. So technically, a break of this area could be a short, but what's the potential? You're talking about maybe getting towards here, about 32.23. That's only $7 away. Okay, so, well, I guess that's still some money, but I don't think that it's a good risk reward. Right now, overall trend in gold is bullish. You have a consolidation. If you're more of a conservative trader, when you see a consolidation and your big trend is bullish, it would actually be better for you to see whether you can get nice pricing. So to join the buy side. So for now, folks, I'm not willing to sell this. You give me a close or get me towards that 3209 area, and at that point I can be binary, meaning I can decide to buy because I would argue that this is a nice ranging market, or if there's a close below 3209, then I could also immediately take the sell side of euro. Again, my argument would be, this is a key support level at this point. An hourly push below it could see me easing towards 31.85. That's a bit, that's quite a number of pips. You're talking, how much? You're talking about 24 pips, rather you're talking about $24 there. So, no immediate action from where we are. Nothing very convincing as far as that chart is concerned. Long-term, gold is likely to remain a buy, but this is not a good price to jump into anything right now. If there's a break of resistances, okay, if there's a break of the high, and what's the high from, what's our resistance level? Let me go dailies. our high for the day is at 32.45. Friday's high is 32.45 as well. So yeah, push beyond 32.45 and give me some bad news, and that, we can argue, okay, look for um, look for new highs in your gold prices. But as it is right now, we're not in a position to do anything. Now, let's try to forecast just how high can we get in gold. So how do we do that? We've got Fibonacci tools to do this. One would be your Fibonacci expansion. Let me just see if this was a Fib retracement level. Sorry. So, okay, let me just do this first. So, if we look at this price swing in gold, we see that you had your rally. These, by the way, these are daily charts. You pulled back to 61.8 fib level, and at that point, so a pullback to 61.8 fib level basically is a good entry point for joining a trend. So I would say this is a nice validated Fibonacci numbers. Rally, pull back to 61.8 fib. So what I can do now is I can use what's called a Fibonacci expansion to come up with potential price targets on the upside. So we know that we have a nice pullback there. Let me delete those fib retracements and use Fibonacci expansions on those prices. Here's that swing. Here's the pullback to 61.8 fib. So what does that give us as far as price targets are concerned? Well, looks like a breakout of your 32.45 area should have you thinking in terms of hitting this level here. Oops, that's too big. So again, if you cannot find support and resistances already in your chart, one thing that you can use are Fibonacci expansions. As long as you have a verified rally, pullback to fib levels, you can apply your Fibonacci expansions there. And basically, we are looking for gold to try to push towards this 32.91 level. That 100% there simply is this line. Let's call that A. And let's call this your A prime. So A prime is basically just a transposition of your rally. So essentially we're saying that this rally was good, it's pulled back, and it's going to rally again towards the same amplitude. But again, we're not in a we keep saying this, we're not in a position to do anything in gold at the moment. Break your highs and our target will be 30 to 91. Give us an hourly close below 32.09, and at that point I would call for a pullback towards the 31.85 area, maybe even towards the previous highs here, that 31.60s level. But you cannot do anything at the current market price. Remember your candlesticks. In your candlesticks, if you see candles that look like this, those are indecisions. Those are signs of indecision. When you have a small body and roughly equal sizes in the wick and your tail. So you see something like that, you have an indecisive market, and if you're a trader who's in it for the money, then you don't want to be in an indecisive market. You want to be in a market that's moving. So nothing for gold at this point. Okay, let me just try something here. All right, what else is there? If not gold, not euro, where can we take a trade? I'm thinking, why not check out oil? I actually haven't looked at the energy market for a while, but I'm thinking maybe there's something there. Why oil? Because I would expect that with all the tariff talk, oil should have dropped. Okay, looks like I don't have energies here. Uh, let's take a look at currencies then, or let's use another platform. Is there something in oil prices? Okay, not really a good looking chart. We've seen indecision, we've had a nice sell-off in oil. We haven't moved so far for the day. Average daily range for oil, it's about $2.55. So far, we've had oil today at highs of 61.62, lows at 60.62. So you've had about a third of your average daily range in oil. You're more than a third, so about 40%. But again, you have an indecisive candle in the dailies. Let's just see if there's anything we can do, lower time frames. Well, okay guys. I don't normally trade oil, so I'm not sure about the computations here. But this is a classic straddle situation. You have a very well-defined consolidation in oil, with highs for the day, lows for the day as your potential entry. Now, again, I said that, as I said, I don't really trade oil that much, so I'm not going to do anything personally, but this is a nice consolidation, and all I need is a solid breakout. Meaning, give me a, okay, that's too big. Give me a close above the day's high, which is also your consolidation high, or give me a close below it, and either of those trades I can do if there is an hourly close outside of those levels. If you have a break of if you have a close above that 61.26 area, your objective would be this price point. That's about 61.80, and then these highs here. is actually, if you look at your chart, you actually have a pennant that's forming here. So classic straddle available for us in crude. This is a West Texas instrument, by the way, WTI. Well-defined consolidation, well-defined targets if a breakout occurs. We need a close above your high for the day, or above or below the low for the day on an hourly scale before we take action. If you do take this trade, stop losses ideally would have to be if you're going to take the buy side, your stop loss should be below the low here. If you're going to take the sell side, stop loss should be above your consolidation high. So we really don't have anything that's looks good to trade at this point, guys. Before I go, let me take another look at your euro, because you know me, I always like to trade the euro. Alright, looks like we're seeing a pullback in the lower time frame for euro. Yeah, as we said earlier, get us to the support level. Okay, get us here to this area and start showing me, start showing me hammers from 1349, these kinds of candles, or this kind of candle, and I'd love to go long in euro at that point. Selling it, I don't really think that there's a catalyst for a euro sell-off. You know, if I look at this and I'm thinking, you actually have a double top forming in the hourly chart, the last 2 days. This would be a trigger of your double top around that 1250 area. But you know what, guys? More often than not, when you find patterns like this, the market will try to, the market will try to sort of complete the pattern, but the breakout is not likely to happen. Okay, so yeah, we've got a double top forming there. The breakout point of that double top is about this level, the lows from your North American session last Friday. But again, as we said, normally you just complete that pattern, but you don't actually get a nice sell-off. You don't actually get a reversal, unless of course you have fresh news coming that would be bad for the euro. But if you look at the news feeds, we don't think that there's anything that bad coming out which would weaken the currency. So guys, thank you for joining. Sorry for the earlier technical snafu.